Hi, and welcome back to my final morning report chart appraisal on Thursday the 5th of March with me, Rich, pro-market analyst at Handtech Markets. I'm going to look at gold, and well, on a daily level, you would argue that you're still in this bear market, medium-term bear market, and the indicators are fairly negative, but I would say that you're not really doing anything really over the last 2.5 weeks, and I would say that if you look on an intraday hourly chart, you're basically going sideways on gold. Not really gone anywhere for 2.5 weeks. Yes, you do have this. Once again, you've got this back in sort of late February. You had this sequence of lower highs, lower lows, and then it started to reverse that: higher highs, higher lows. You're now back into a sequence of lower highs and lower lows. Now, it'll be interesting to see if the support holds, because you still have the impression that these indicators on the hourly chart are giving us signals that suggest we're still in a range play. You're slightly near term, very slightly negative, and that is reflective of these lower highs and lower lows. However, I would say that the support is still holding. You've got this low at 1194.90. You had the low yesterday of 1197.85, which is still intact, and you're still sort of not really showing too much appetite for selling on this gold price at the moment. But the fact is that obviously we are still in this medium-term bear run here. Which suggests that ultimately you may well see a downside break, but at the moment I think it's not definitely going to happen today. For example, it might well be that we're waiting on this gold chart for the non-farm payrolls tomorrow before we get a decisive move either way, because you've got that resistance that continues to come in at 12.23, which is arguably, if you saw that move, if you zoom out here, you saw that move above 12.20, that would arguably be a base pattern. So it's still sort of up in the air really as to exactly what's going to happen. I think non-farm payrolls could be the driver. I think in front of that, we're seeing, broadly speaking, this consolidation continue. Yes, you have got this slightly bearish bias within the range, and that's, as I said, once again reflective of the momentum indicators we've seen over the last couple of days. MACD line slightly negative, RSI on the hourly chart finding resistance in the mid-50s. So there is a slightly bearish bias, but at the moment the selling pressure isn't coming through, and I think that's because we're seeing consolidation in front of payrolls before we get the payrolls report. But for now, the support is holding. Clearly 1190.90 is the support that we need to watch out for. But it certainly looks like just a slight bearish bias within this consolidation pattern. Anyway, I wish you good luck in your trading today, and I'll speak to you later. Thank you.